Welcome to the deep dive. Today we're going to be tackling Housing and Urban Development Corporation Ltd, or HUDCO for short. You've given us a ton to work with: financial reports, earnings call transcripts, even an investor presentation. Looks like you're really trying to get a handle on Indian infrastructure finance, and you've picked a company at the heart of it all.
Absolutely. HUDCO is playing a major role in India's growth, but they're also going through a really fascinating transition. That's kind of what makes them so interesting to analyze.
So where should we start
Hmm.
with this mountain of info you've given us?
Well, I think the most logical place is the beginning. Like, what is HUDCO? What makes them unique in the world of finance?
Okay, so back to basics. Good place to start.
HUDCO is kind of a bit of a hybrid. They've been around for over 50 years, and they started as a pure housing finance company. But over time, they've broadened their scope to include all sorts of infrastructure projects. What's really intriguing is their techno-financial approach.
Techno-financial. That sounds a little jargony. What does it actually mean?
It means they're not just about lending money. They bring technical expertise to the table, offering consultancy services on everything from architecture to environmental impact assessments. They even have a training institute where they educate professionals on best practices in urban development.
So they're not just building roads and bridges, they're building knowledge and capacity as well.
Uh,
That's pretty cool. And it really aligns with their motto: profitability with social justice.
exactly. They're a Navratna company, which is a special designation for high-performing public sector enterprises in India.
Oh, right. I've heard that term before, like the crown jewels of the public sector.
Yeah, exactly. And they're listed on the stock exchange, with the government owning about 75% of the shares. So they have to balance public good with profitability. It's kind of a tightrope walk.
And on top of that, they're experiencing explosive growth. I mean, their loan sanctions have increased fivefold year on year. That's not just growth, that's a rocket taking off.
Yeah. To give you a sense of scale, they've gone from sanctioning just over 20,000 crores to over 92,000 crores in a single year.
Wow.
And their disbursements and their overall loan book are also just skyrocketing.
So what are they doing with all that money? Paint me a picture of their loan portfolio.
Picture this: 40% housing and 60% urban infrastructure.
Okay, so a pretty even split.
Yeah, roughly. On the housing side, the government's PMA 2.0 initiative, the Housing for All program, is a major driver. HUDCO provides financing and acts as a nodal agency, so they help get funds where they're needed most.
So affordable housing is a big chunk of what they do, but what about the other 60%, the urban infrastructure projects? What kind of things are we talking about?
Everything. Metro systems and expressways to water supply projects, sewage treatment plants, even ports and airports. They're involved in financing the construction itself, and also the land acquisition, which is often overlooked but really crucial.
So they're involved in pretty much every facet of urban development. That's impressive. But it also raises the question, why are states going to HUD-DISO when they could, theoretically, get cheaper financing through, government bonds?
That's where HUDCO's unique structure comes in. States face limits on how much they can borrow, and HUDCO offers some major advantages. For one, they provide incredibly long loan tenures, sometimes up to 20 years. And that's crucial for large-scale projects that take a long time to generate revenue.
It's like the difference between a short-term loan and a mortgage.
Right.
You wouldn't expect to pay off a house in a couple of years, would you?
Exactly. These mega projects need that breathing room. And HUDCO is known for being, flexible and providing tailored solutions for each project. They work collaboratively with states to, structure deals that make sense for everyone.
Okay, so they're not just about rigid terms and conditions. They're willing to be partners in these projects, which must be appealing for states facing, complex challenges.
Absolutely. They're taking a long-term view, and their financial health reflects that.
And speaking of financial health, one number really jumped out at me: their NPA rate. The percentage of loans that aren't being repaid is a minuscule 0.18%. I mean, that's practically unheard of, isn't it?
It's incredibly low. And a point of pride for HUD-BK, it speaks to their robust appraisal and monitoring mechanisms. They do their homework before lending, and they stay actively involved throughout a project's life cycle, making sure things are on track.
So it's not just about writing a check and hoping for the best. They're really hands-on, which makes sense given their techno-financial approach.
Right. They have skin in the game beyond just the money. They're invested in the success of these projects, and it shows. Now, even with the best planning, some projects inevitably run into trouble. But HUDCO is very proactive when it comes to NPA resolution. They've recovered over 456 crores from NPAs in just the last 9 months, even from government agencies.
So they're not afraid to hold borrowers accountable, even if it's the government. That's not easy to do.
They're definitely not shy about it. But it's not just about, recouping losses. They're also committed to finding solutions that work for everyone. They'll restructure loans, extend repayment periods, whatever it takes to get a project back on track. It's all part of their long-term partnership approach.
And it seems to be working. They have this incredibly low NPA rate, and they're experiencing explosive growth. What else is contributing to their financial success? What's the magic formula here?
Well, one thing that stands out is their approach to managing their cost of funds. They've been remarkably successful at lowering it, even while they're lending more than ever before.
Wait a minute, how is that even possible? Shouldn't their costs be going up if they're lending more? It seems counterintuitive.
Yeah, you'd think so, right? But they've been really strategic about diversifying their funding sources. For example, they've tapped into international markets like Japan, securing yen-denominated loans at really favorable rates. They're also exploring euro loans and bonds, playing the global finance game to their advantage.
So they're not just relying on domestic borrowing. They're going global to get the best deals, and it's having a real impact.
Absolutely. Their incremental borrowing cost has come down significantly, which, directly boosts their profit margins. It's a brilliant strategy, especially in today's volatile global markets.
Okay, so they're managing their costs effectively, their NPAs are practically non-existent, and they're growing at an astonishing rate. But what do their overall financial indicators look like? Are those numbers as impressive as everything else we've discussed?
They really are. Their debt-to-equity ratio, which measures their financial leverage, is a very manageable 5.17. Think of it like a seesaw. You want a good balance between borrowed funds and shareholder equity.
And they've got it.
Yeah.
So no wobbling on the financial seesaw.
Yeah.
What about their capital adequacy ratio? Is that as strong as their debt-to-equity ratio?
It is. It sits at a healthy 47%, showing they have more than enough capital to support their lending activities. They're not overextended, which is a good sign of, responsible growth.
So far, so good. But what about the bottom line? Are they actually turning all this activity into profit?
Oh, absolutely. Their return on assets, which is a key measure of profitability, is a very respectable 2.45%. And their return on equity, which shows how effectively they're using shareholder funds, is an impressive 14.71%. Those are all signs of a company in an excellent financial health.
Okay, so they're ticking all the boxes. Strong growth, low MPAs, excellent profitability. But can they keep this momentum going? What does the future hold for HUDCO?
Well, they're aiming high. They're projecting a loan book of INR 1.5 lakh crore by FY26 and a whopping INR 3 lakh crore by 2030.
Hold on a second, that's almost triple their current size. Where is all that growth going to come from? More government projects? Or are they looking at something different?
That's where things get really interesting. To hit those targets, they're going to have to shift away from their reliance on government-backed loans. They'll need to venture into new territory.
That's new territory. What do you mean?
Think private sector projects, public-private partnerships, even more international financing. They're going to have to develop new strategies for assessing and managing risk because these types of projects can be far more complex and unpredictable than, traditional government infrastructure.
So they're going from a relatively safe and predictable environment to something far more dynamic, even volatile. That's a big shift, and it comes with inherent risks.
It does. And one project in particular kind of highlights this new direction, the GMPT Port Project.
Ah, yes, the JNPT Port Project. That's a massive undertaking, estimated to cost around INR 25,000 crore, right? And HUDCO has committed to funding a quarter of it. That's a bold move.
It is, and it signals their confidence in the project and its potential to drive growth. But it also exposes them to a new level of risk, given the project's complexity and the, involvement of multiple stakeholders.
So they're putting their money where their mouth is, but it's not without risks. It'll be fascinating to see how they manage this transition.
Absolutely. The JNPT project is kind of a microcosm of the larger challenges and opportunities HUDCO faces as they navigate this new landscape.
And for those of us who might be considering investing in HUDCO, what's the key takeaway here?
They have a strong track record of dividend payouts. In fact, they just announced an interim dividend of INR 7.05 per share. And based on their projections, they don't anticipate needing further capital infusion, which is, good news for shareholders.
So they're saying they can have their cake and eat it too, fund ambitious growth and still reward shareholders. But can they really pull it off? Is this too good to be true?
It's a valid question. Their ability to maintain this balance will depend on a lot of factors, including, the overall economic environment, the effectiveness of their risk management, and of course, the profitability of the projects they choose.
Right, there are a lot of moving parts. What are the key things investors should be watching to gauge HUDCO's future performance? What are the red flags, so to speak?
There are a few key indicators to keep an eye on. First and foremost, their NPA levels. If those start to creep up, it could be a sign that their risk management isn't keeping pace with their expansion into, riskier projects.
Right, it would be like cracks appearing in that bridge we were talking about earlier. What else should we be paying attention to?
Their cost of funds is another critical factor. If they can continue to access capital at favorable rates, it'll give them more flexibility to price their loans competitively and, maintain healthy profit margins.
So keeping those borrowing costs down is essential. What about their loan portfolio mix? How will that evolve as they take on more private sector projects?
That's an important point. It'll be interesting to see if the proportion of government guarantees loans, decreases and whether they can find equally profitable and low-risk opportunities in the private sector.
Yeah.
It's a big question mark.
It sounds like HUDCO is at a pivotal moment in its history. They have this incredible track record of success, but they're also embarking on a path that comes with, inherent risks.
It is a defining moment. It's like they're standing at a crossroads. They could become a model for financing sustainable and inclusive development, not just in India, but globally. Or they could, stumble as they navigate this new terrain.
So there's a wide range of potential outcomes. What advice would you give our listener who's trying to make sense of all this information?
I would say don't just focus on the numbers. Look beyond the financial statements and try to understand the broader context. Read about India's infrastructure goals, research the specific projects HUDCO is involved in, and pay attention to the political and regulatory environment.
Right. It's all about connecting the dots, seeing how HUDCO fits into the bigger picture.
Exactly. If you do that, you'll have a much richer understanding of the opportunities and risks that HUDCO faces.
Okay, I think we've given our listener plenty to think about. We've analyzed HUDCO's financials, their strategy, their risks, and their role in India's development story.
Hmm.
But there's one piece of the puzzle we haven't explored yet.
You're talking about the human element, aren't you? The people behind the numbers.
You read my mind. We've talked a lot about, projects and finances, but what about the people driving HUDCO forward? Who are they? What motivates them? And what are their hopes for the future?
Those are excellent questions, and I think they're crucial to understanding any organization, especially one that plays such a significant role in, society.
Yeah.
Thankfully, you've provided us with some insights into the minds of HUDCO's leadership.
Yes, we have that transcript from their recent earnings call where the chairman and managing director, the CMD, and other senior executives answered questions from analysts and investors. Let's see if we can glean some insights from their words.
Welcome back to our deep dive into HUDCO. Before we were discussing HUDCO's ambitious growth plans and their move into financing more private sector projects, it's like they're stepping off a well-worn path and onto a less traveled one.
It is a big shift, and as with any new path, there are bound to be some unexpected bumps and turns along the way.
Exactly. Those bumps could be anything from a sudden economic downturn to regulatory changes or even, global instability. The question is, how is HUDCO preparing for these potential challenges?
They're not exactly rookies, are they? I mean, they've been around for over 50 years. They must have some strategies up their sleeves for managing risk in this new environment.
You're right, they're not newcomers. And they've been taking concrete steps to strengthen their risk management framework. For example, they set up a whole new department specifically dedicated to private sector and PPP project financing.
So they're bringing in specialists who understand the nuances of these more complex projects, people who know where the potential pitfalls might be.
Precisely. It's not just about having the right people, though. They're also developing new assessment tools and methodologies to evaluate risk more comprehensively. They're really trying to anticipate potential problems before they arise.
That's encouraging. But let's be realistic. No amount of risk management can, eliminate the possibility of things going wrong. What happens if a major private sector project they've funded goes belly up? Could that have a ripple effect on their entire portfolio?
That's the million-dollar question, and it's something analysts and investors are watching very closely. Remember, HUDCO's current success is built on its incredibly low NPA rate, which is partly due to the, large portion of government-guaranteed loans in their portfolio.
Right. It's like having a safety net. But as they take on more private sector projects without that net, their risk profile changes significantly.
Exactly. They're going to need to be much more selective about the projects they choose to fund. More rigorous due diligence,
Yeah.
careful cash flow analysis, and possibly even stronger collateral requirements from private borrowers. Those things will be crucial.
So it's a delicate balancing act. They need to be bold enough to, pursue higher growth opportunities, but cautious enough to avoid taking on excessive risk.
Absolutely. Finding that balance will be key to their long-term success.
It's interesting to consider HUDCO in the context of India's overall development trajectory. The government has these ambitious plans for infrastructure development with initiatives like housing for all, smart cities, and the push towards a $7 trillion economy.
Absolutely. And achieving those goals requires massive investment. The government can't, shoulder that burden alone. They need partners like HUDCO to attract private capital and channel it towards these, critical infrastructure projects.
So HUDCO is like a bridge between the government's vision and the private sector's resources. They're connecting those who have the money with those who need it to build a better India.
I like that analogy, a bridge builder. And it's a role they're actively embracing. They're working with both the government and private companies to create financing models that benefit everyone.
Okay, let's talk about something that's probably on the mind of anyone considering investing in HUDC, their dividend policy. They've got a good track record of payouts, but can they maintain that as they chase these, ambitious growth targets? Won't they need to reinvest all their earnings to fuel that expansion?
It's a valid concern,
Mm.
but based on their current projections, they seem confident they can maintain a healthy dividend payout ratio, even as their lending activities grow.
So they're saying they can have their cake and eat it too, but is that realistic? Are they being overly optimistic?
It's hard to say for sure. It'll depend on a lot of factors, including, the overall economic environment, the effectiveness of their risk management, and, of course, the profitability of the projects they choose.
Right. There are a lot of moving parts. What are the key things investors should be watching to gauge HUDCO's future performance? What are the red flags, so to speak?
There are a few key indicators to keep an eye on. First and foremost, their MPA levels. If those start to creep up, it could be a sign that their risk management isn't keeping pace with their expansion into, riskier projects.
Right. It would be like cracks appearing in that bridge we were talking about earlier. What else should we be paying attention to?
Their cost of funds is another critical factor. If they can continue to access capital at favorable rates, it'll give them more flexibility to price their loans competitively and, maintain healthy profit margins.
So keeping those borrowing costs down is essential. What about their loan portfolio mix? How will that evolve as they take on more private sector projects?
That's an important point. It will be interesting to see if the proportion of government-guaranteed loans, decreases and whether they can find equally profitable and low-risk opportunities in the private sector. That's a big question mark.
It sounds like HUDCO is at a pivotal moment in its history. They have this incredible track record of success, but they're also embarking on a path that comes with, inherent risks.
It is a defining moment. It's like they're standing at a crossroads. They could become a model for financing sustainable and inclusive development, not just in India, but globally. Or they could, stumble as they navigate this new terrain.
So there's a wide range of potential outcomes. What advice would you give our listener who's trying to make sense of all this information?
I would say don't just focus on the numbers. Look beyond the financial statements and try to understand the broader context. Read about India's infrastructure goals, research the specific projects HUDCO is involved in, and pay attention to the political and regulatory environment.
Right. It's all about connecting the dots, seeing how HUDCO fits into the bigger picture.
Exactly. If you do that, you'll have a much richer understanding of the opportunities and risks that HUDCO faces.
Okay, I think we've given our listener plenty to think about. We've analyzed HUDCO's financials, their strategy, their risks, and their role in India's development story. But there's one piece of the puzzle we haven't explored yet.
You're talking about the human element, aren't you? The people behind the numbers.
You read my mind. We've talked a lot about, projects and finances, but what about the people driving HUDCO forward? Who are they? What motivates them? And what are their hopes for the future?
Those are excellent questions.
Or
And I think they're crucial to understanding any organization, especially one that plays such a significant role in, society. Thankfully, you've provided us with some insights into the minds of HUDCO's leadership.
yes. We have that transcript from their recent earnings call where the chairman and managing director, the CMD, and other senior executives answered questions from analysts and investors. Let's see if we can glean some insights from their words. All right, let's dive into this earnings call transcript and see what we can learn about the people behind HUDCO's success.
I think you'll find it quite insightful. The CMD's opening remarks really set the tone. He talks about HUDCO's, evolution from a housing-focused lender to a broader infrastructure financing institution,
Hmm.
highlighting their commitment to the Viksit Bharat vision.
Viksit Vada. Now remind me, that's
Developed India
developed India.
by 2047.
Ah, right. Okay. So they're thinking long term.
Yeah, very much so.
That's a bold vision, and it sounds like HUDCO is, positioning itself to play a key role in making it a reality.
Exactly. What's interesting is how the CMD describes HUDCO's role. They're not limiting themselves to specific sectors. They're involved in housing, urban development, even rural infrastructure. They're taking a holistic approach, providing not just financial support, but also, consultancy services and training. It's about empowering communities to kind of build their own futures.
He also mentioned their regional offices acting as growth engines, actively involved in project monitoring, and even helping to resolve SMA2 assets.
Ah, yes, that's an important point.
Yeah.
For those unfamiliar with the term, SMA2 assets are loans that are showing signs of, stress, potentially on the verge of becoming non-performing.
Hmm.
HUDCO's proactive approach to identifying and addressing these potential problems early on is a key factor in their low NPA rate.
So they're not just sitting in their headquarters. They're out in the field, working closely with borrowers to, ensure projects stay on track. That hands-on approach must be incredibly valuable, especially in a country as vast and diverse as India.
Absolutely. It allows them to, build relationships, understand local nuances, and tailor solutions to fit specific needs.
And it's clearly paying off. The CMD highlighted their strong financials, boasting about their low debt-to-equity ratio, healthy capital adequacy, and impressive loan sanctions and disbursements.
Yeah, he also emphasized their focus on cost optimization, specifically mentioning their success in, reducing their cost of funds despite rapid growth. That's a crucial aspect of their strategy,
Mhm.
especially as they venture into more, competitive markets.
Yeah, he even dropped a little humble brag, saying their weighted average cost of borrowing is 6.8%, which gives them the flexibility to fund high-quality assets without sacrificing profitability. It's like they're finding that sweet spot between doing good and, doing well.
It is a delicate balance, and they seem to be managing it effectively. He also mentioned their efforts to modernize the organization, bringing in new blood through recruitment, improving corporate governance, and implementing new IT systems. They're not resting on their laurels. They're constantly striving to, be better.
It sounds like they're building a culture of continuous improvement, which is essential in today's, dynamic world.
Absolutely. Now let's move on to the Q&A portion of the call, where analysts really put the management team through their paces. What impressed me was their transparency and willingness to tackle tough questions head on.
Yeah, there was no dodging or deflecting. They provided detailed answers and explained their reasoning, which shows a level of, confidence and accountability that's reassuring.
For example, when asked about their ambitious growth targets, they acknowledged the need to move beyond relying solely on government-backed loans. They understand that achieving those goals will require embracing new types of projects and taking on more calculated risks.
And when pressed on how they're, mitigating those risks, they didn't hesitate to point out their new department specializing in private sector financing, their strengthened appraisal processes, and their willingness to work collaboratively with borrowers to find solutions when projects encounter difficulties.
Right. And they were also adamant about maintaining their impressive low NPA levels, emphasizing that they won't compromise on, asset quality even as they pursue more aggressive growth.
There was a particularly interesting exchange about the JNPT port project. You could kind of sense their excitement about being involved in such a transformative project, but they were also realistic about the challenges involved.
Yes, they emphasize that they'll be negotiating favorable terms and conditions to ensure the project's, financial viability before committing substantial funds.
Hmm.
They're not just throwing money at a flashy project. They're being strategic and prudent.
And on the dividend front, they seemed confident in their ability to continue their track record of payouts, even as they pursue these ambitious growth plans. They're not asking investors to choose between growth and returns. They're promising both.
But they were also careful not to overpromise. You know, they acknowledge that their ability to pay dividends will ultimately depend on their overall profitability and the effectiveness of their risk management strategies. They're being transparent about the challenges ahead.
So it seems like HUDCO's leadership team is walking this tightrope between ambition and prudence. They're aiming high, but also taking steps to manage the, inherent risks involved.
Exactly. They're not shying away from the challenges, and they're clearly committed to balancing financial success with their social mission.
So what's the final takeaway for our listener? What should they be thinking about as they consider HUDCO and its future?
I think the key takeaway is that investing in HUDCO is about more than just analyzing numbers and financial ratios. It's about understanding their unique approach, their commitment to, social impact, and their role in shaping India's future.
It's about being part of a story that's bigger than just one company or one investment. It's about contributing to India's journey toward becoming, a global economic power while also improving the lives of millions of people.
Exactly. It's a compelling story, but it's not without its complexities and potential risks. We always encourage our listeners to do their own research, dig into those financial statements, and consider the broader context we've discussed.
And as you weigh your options, think about what kind of future you want to be a part of. Investing is about aligning your capital with your values. With HUDCO, you have the opportunity to, potentially earn a solid return while also contributing to a truly impactful mission. Now, here's something that wasn't explicitly addressed in the materials you provided, but it's a question worth pondering. As HUDCO expands its role in financing private sector infrastructure projects, how will that impact their commitment to social justice?
That's a great point. It's one thing to balance profitability with social impact when you're primarily working with, government partners. Yeah. But as they venture into the more competitive world of private sector projects, will those values remain as central to their decision making?
Will they be able to maintain that delicate balance, or will the pressures of the market force them to compromise? It's something to think about as you evaluate HUDCO and its future. We hope this deep dive has given you the information and insights you need to make informed decisions about HUDCO and to continue exploring this fascinating intersection of finance, development, and social responsibility.
Until next time.
Deep diving deep.